Crocs stock is down almost 30% in a single trading day and down 41% in the past year because they reported earnings, and although they beat earnings expectations, they issued disappointing third quarter guidance. So in this video, I am going to do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, using my spreadsheet to calculate the intrinsic value of Crocs, as well as looking at the main risk if investing in this company and revealing whether or not I am adding it to my portfolio. Starting with their financials, their revenue grew very nicely from 2020 to 2023, but since then, it seems like it has flattened out at $4 billion, and it is currently growing at around 2% annually. If we take a look at their profit, their net income has taken a huge hit from $450 million to $236. So we have to see if this is a one-time thing or this trend is going to continue. However, their free cash flow has remained very strong, and it is currently at $768 million. One thing that I really like about their financials is the number of shares outstanding. They have been buying back shares heavily, which is very positive for investors as you own more of the company and you share the profits of the company with less people. Their margins are also very good, with gross margin being at around 60%. Profit margin before this huge drop in net income was around 20%, and their free cash flow margin is also at around 20%. If we take a look at the financial forecast, their revenue is expected to be flat for the next 3 years and still be at around $4 billion. And their EPS the same and expected to be $12 per share in 2027. However, if you assign a 10p to the company, then it would make it a $120 stock. So huge returns according to analysts. In order to calculate the intrinsic value of the company, I use my spreadsheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value for Crocs is between $108 per share according to my low assumptions and $219 per share. This also means that if my low assumptions occur and you buy Crocs at today's price, which is $74 per share, you are going to make an 18.5% annual return on your money, middle 26.5%, and high 34.5%. So insane returns according to the spreadsheet. I believe my assumptions are reasonable as I have the company growing 0% revenue annually for the next 7 years, 2% on the middle and 4% on the high, averaging a profit margin and free cash flow margin between 15 and 20%. I assigned a PE and price to free cash flow at the end of the 7 years of 10, 12, and 14, which is very low. And I even left the share outstanding change at 0%. However, we have seen that they have been buying back a ton of shares, so if we assume they keep doing that, and we assume, let's say they buy back only 2% of their shares, the intrinsic value becomes even higher. So it is clear that Crocs is heavily undervalued. It's been a while since I last saw a company this undervalued. If you want access to the spreadsheet, I'm going to leave a link in the description below. This is only for value investors. The spreadsheet does not take into account the balance sheet, and Crocs has an alright balance sheet with $200 million in cash and $1.7 billion in debt, which actually is some debt for a company that has a market cap of $4 billion. But again, it is heavily undervalued. If we take a look at the valuation ratios, the forward PE is 5, the price to sales is 1.4, and the price to free cash flow is 5.7. However, in my opinion, there is a big risk in investing in Crocs, which is that it is a fashion stock. So fashion is cyclical, so a negative shift in trends will hurt demand and the company completely. Nobody knows if the brand will be able to reinvest itself or if it's riding the last wave of its popularity. On my 4 current holdings, as you can see, the best performing one so far is SoFi with returns of 208%. I am very interested in Crocs, but I am personally going to do more research because of the balance sheet and the risks that I have just mentioned, but I am very interested in Crocs. I hope you found this video valuable. Let me know what you think about Crocs Stock in the comments, and I'll see you in the next one.